So everyone's talking about Bitcoin hitting new highs, Ethereum doing its thing, but there's this other crypto that's been quietly building something completely different. And I'm not talking about some meme coin or the next supposed Ethereum killer. I'm talking about XRP. And before you roll your eyes, just hear me out, because what's happening right now is actually pretty wild. While most cryptos are trying to replace banks or work around them, XRP did something different. It said, you know what? Banks aren't going anywhere. So let's build the technology that actually makes them faster and cheaper. And here's the thing, it's actually working. Last quarter, Ripple's payment network processed $1.3 trillion in settlements. That's trillion with a T. 300 banks worldwide are using this thing, and yet the price is down 18% in the last month. So what's going on here? Is this a sleeping giant that institutions are quietly accumulating while retail ignores it? Or is this just another crypto that sounds good on paper but doesn't actually matter? Let's break it down. First, you need to understand what XRP actually is, because it's completely different from Bitcoin. Bitcoin was designed to be digital gold. You hold it. Maybe you spend it someday, but mostly it's about storing value outside the traditional system. It's proof of work. It takes 10 minutes to confirm a transaction. And during busy times, you might pay $20 to $50 in fees. That's fine if you're moving $10,000, but it's not great if you're trying to actually use it as money. XRP is different. It was designed to move money between banks as fast as possible for almost nothing. We're talking 3 to 5 second settlements, fractions of a cent in fees. It can handle 1,500 transactions per second, while Bitcoin does about 7. Now you might be thinking, okay, so it's faster and cheaper, but who cares? Here's why it matters. When you send an international wire transfer right now, it takes 3 to 5 days and costs you $30 to $50. You know why? Because your money has to go through multiple correspondent banks, each one taking a cut, each one adding time. Banks have to keep huge amounts of money locked up in foreign accounts just to facilitate these transfers. They call them no accounts. It's expensive and it's slow. XRP eliminates that. A bank in the US can convert dollars to XRP, send it across the XRP network in seconds, and a bank in Japan converts it to yen. Done. No correspondent banks, no money locked up overseas. And get this, banks are saving 70% on liquidity costs using this system. 70%. Now, here's where it gets interesting for you and me. Banks are saving 70% on costs. Your wire transfer fee still $45. They upgraded to 3-second settlements. Your transfer still takes 3 to 5 days. See the pattern? They're using 20th century technology, charging you 20th century fees. This is the class warfare angle nobody wants to talk about. But let's get into the actual numbers, because this isn't just theory anymore. Ripple just announced their stablecoin, RLUSD, hit over $1 billion in market cap. It launched in December 2024, so we're talking less than a year. Their head of stablecoins said the growth is outpacing their internal projections. Over 860 million in monthly transfer volume. That's real money moving through the system. And it's not just payments. Nonprofit organizations like World Central Kitchen and Water.org are using RLUSD for humanitarian aid. Why? Because when you're trying to get money to disaster zones, you can't wait 3 to 5 days for a wire transfer to clear. You need it now. That's real-world utility. Then there's the ETF situation. This is huge. 5 XRP ETFs just launched in the US. Canary Capital launched first on November 13th. Franklin Templeton and Gayscale followed on November 24th. Bitwise, 21 shares, CoinShares are all listed on the DTCC and about to go live. These aren't futures ETFs where you're just betting on the price. These are spot ETFs that actually hold XRP. And here's what happened. In the first 3 weeks, these ETFs pulled in over $640 million. They bought over 300 million XRP tokens. For context, when Bitcoin ETFs launched earlier this year, everyone said that was the moment crypto went mainstream. Well, XRP ETFs are here now, and they're pulling in institutional money. There's also ProShares Ultra XRP ETF that launched in July. It's a 2x leveraged futures fund, meaning it tries to deliver double the daily performance of XRP. That fund has 70 billion in assets under management. 70 billion. That's not retail investors gambling on Robinhood. That's real institutional money. Now let's talk about what banks are actually doing with this technology. Ripple has something called on-demand liquidity, or ODL. It's exactly what it sounds like. Instead of banks keeping billions locked up in foreign currencies, they tap into XRP liquidity on demand. In the second quarter of 2025, ODL processed 1.3 trillion in transactions. It's growing 17% quarter over quarter. 300 financial institutions are using Ripple. Ripple Payments has processed 70 billion across 90 plus markets. We're talking Santander, SBI Holdings, PNC Bank. These aren't small players. And here's the kicker. This is all happening while XRP's price is down. Which brings us to the big question. Why is the price down if all this adoption is happening? There are a few reasons. One, XRP got crushed along with the broader crypto market in November. Bitcoin dropped, everything else followed. Two, long-term holders have been selling. The data shows holders in the 1 to 3 year range have been reducing positions. They bought lower. They're taking profits. But three, and this is the important one, there's a massive disconnect between what's happening on the network and what's happening with the price. XRP is processing more transactions than ever. Banks are saving money, ETFs are buying, and yet retail investors are mostly ignoring it because it's not going up. This is actually pretty common in markets. The fundamentals improve while the price consolidates. Then eventually the price catches up, or it doesn't, and you were wrong about the fundamentals. That's the risk. So let's talk about the investment case, because that's what you actually care about. Why would you put money into XRP right now? Reason one, institutional adoption is real. This isn't some white paper promising a decentralized future. 300 banks are using it right now. The network processed over $1 trillion last quarter. When institutions are quietly building infrastructure around something, that usually means something. Reason two, regulatory clarity. XRP just settled its lawsuit with the SEC in August for $125 million. The court ruled that XRP is not a security when sold on exchanges. It's classified as a commodity now. That was a massive overhang for years, and it's gone. Every other crypto is still in regulatory limbo. XRP has clarity. Reason three, the ETFs. When Bitcoin ETFs launched, Bitcoin went from 40,000 to over 100,000. Now, I'm not saying XRP is going to do that, but ETFs give institutions and regular investors an easy way to get exposure without figuring out how to custody crypto. That matters. 640 million in 3 weeks tells you there's demand. Reason four, supply dynamics. Here's something interesting. Exchange reserves of XRP dropped 29% in the last month. Binance alone lost $640 million worth of XRP. That's the same amount the ETFs accumulated. Coins are moving off exchanges into cold storage. When supply gets tight and demand picks up, prices usually move. Reason five, the technology actually works. I know that sounds basic, but most crypto projects promise speed and low fees and then can't deliver at scale. XRP has been doing this for years. 3 to 5 second settlements, sub-penny costs, 1,500 transactions per second. It's not theoretical, it's live. Now let's talk about the risks, because there are real ones. Risk one, centralization. Ripple, the company, controls a huge amount of XRP. They have 80 billion tokens that were gifted to them when the network launched. They release some every month from escrow. If Ripple ever dumped a massive amount, the price would tank. They say they won't do that because it would destroy the value of their holdings, but it's a risk. Risk two, competition. Stable coins like USDC and Tether already do cross-border settlements. Central banks are building their own digital currencies. If a major central bank launches a CBDC that works better and cheaper than XRP, banks might use that instead. XRP's value comes from being the bridge currency. If something else becomes the bridge, XRP loses utility. Risk 3, the banks might not need the token. This is a big one. A lot of banks use Ripple's messaging system without actually using XRP for settlement. They like the technology, but they convert to stablecoins or fiat almost immediately. If that continues, XRP could become less important to the network even as the network grows. Risk 4, macro conditions. If the Federal Reserve keeps interest rates high, if there's a recession, if crypto enters another bear market, XRP will go down with everything else. It doesn't matter how good the fundamentals are. If nobody wants to buy risk assets, risk 5, it could just stay flat. This is the most boring risk, but maybe the most real one. XRP could keep processing transactions. Banks could keep using it. ETFs could keep accumulating, and the price could just sit here for years. Not everything that's useful becomes valuable. Utility doesn't always equal price appreciation. So where does that leave us? Right now, XRP is trading around $2. It's down 18% in November, down 40% from its January high of 380. Analysts are all over the map. Some are saying it could hit 260 by end of December if ETF inflows continue. Others are saying it could drop to 180 if Bitcoin weakens and drags everything down. The really bullish people are talking about $5, $10, even higher if mass adoption happens. The really bearish people are saying it's going to fade into irrelevance as stablecoins and CBDCs take over. Here's what I think. XRP is one of the few cryptos where you can actually point to real-world adoption and say this is being used right now by major institutions. That's rare. Most crypto is speculation on what might happen someday. This is happening now, but the price action has been terrible for months, and there's no guarantee it turns around just because the fundamentals are strong. If you're thinking about investing, here's how I'd approach it. This is not financial advice. I'm just telling you how I'd think about it. Don't put in money you need next month or even next year. This could take time. If you believe the thesis that banks will keep adopting this technology and that eventually the price will reflect that adoption, then dollar cost averaging over time. Don't try to time the bottom. Watch a few things. 1, are ETF inflows continuing, or did that $640 million in 3 weeks turn out to be a one-time thing? 2, is Ripple signing more banks, or are they stuck at 300? 3, is ODL volume growing or plateauing? 4, what's happening with RLUSD adoption? If that stablecoin keeps growing, it's a good sign the ecosystem is expanding. And most importantly, what's your risk tolerance? If you're the kind of person who checks prices every day and panics when it drops 10%, XRP might not be for you. It's volatile. It dropped 18% last month while all this good news was happening. If you can handle that and you believe in the long-term thesis, then maybe it makes sense for a small part of your portfolio. For me, the most interesting thing about XRP is that it's not trying to be everything to everyone. It's not trying to be digital gold like Bitcoin. It's not trying to be a smart contract platform like Ethereum. It's just trying to be really, really good at one thing, moving money between banks fast and cheap. And it turns out banks care about that. They care a lot. They're saving 70% on costs. The question is whether that adoption eventually shows up in the price. History says yes. Eventually, utility drives value, but timing matters. You could be right about the fundamentals and still lose money if you buy at the wrong time or if it takes 10 years to play out. So that's XRP, real adoption, real technology, real institutional interest, and a price that's been going nowhere. Is it a sleeping giant? Maybe. Is it a value trap? Also, maybe the market will figure it out eventually. The question is whether you want to place that bet now or wait to see more proof. Drop a comment below and let me know. What do you want us to break down next? Should we dive into other cryptos that institutions are quietly accumulating while everyone chases the next meme coin? Should we expose how quantum computing stocks are exploding because AI needs exponentially more processing power? Or maybe you want to see why nuclear energy companies are suddenly getting billion-dollar contracts because data centers can't run on solar panels and hope. We could also break down gold and silver, why central banks are buying record amounts while telling you inflation is under control. Let me know in the comments what you want exposed next. And if you got value from this video, hit that subscribe button and turn on notifications so you don't miss the next one. Because while retail investors are getting distracted by hype, institutions are positioning themselves for the next decade. The question is whether you understand the game being played before it's too late. I'm Ryan, and this is Ryan's Money Lab. See you in the next video.